Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading doing the nightly market update for Wednesday, May the 24th. So happy Wednesday, happy hump day, happy FOMC day. We had FOMC minutes today. We had some Fed speakers today, well, at least one, and we had Janet Yellen speaking as well. I guess she kind of counts as a ex Fed speaker, I guess. But anyway, want to go over the market, kind of see where we are, see what's going on. We're getting a big. This is after hours, but the ES is, or the futures are still trading, so the ES is getting a big move up. The Nasdaq's getting a big move up. I'm not sure what's going on. There's the rut going straight up here. I don't know. There's been a lot of kind of back and forth action, and that's what we're going to talk about today, and see kind of if we can make heads or tails out of it and see which way we might go and what's coming up on the horizon probably is more important. So let's jump right in, and we'll start with the ES. And if you were trading today, you know that we had actually this looks pretty wild, but this is a little more calm than we have had lately because we kind of had a range bound day. The S&P ended up down about 31 points or something like that. But here's the opening bell. The black is the cash session. This is the overnight session right here. So ding ding ding, and we just start falling, and we've got these levels. These are voodoo lines that are Elliott wave based, and they're very accurate. We have been just kind of slicing through those like they're not even there. For example, there. We did kind of hold down here. This is called a skyline. This is called a snow line. This is a fire line. And these are different levels of support. I guess stronger levels, I guess would say that. But they've kind of, like here it works exactly. Here it works exactly. And then sometimes kind of getting through them. Now these are micro voodoo lines, but anyway, I use these. I use Fibonacci levels. Those have kind of been, I don't want to say less accurate. Just like the voodoo lines, all the levels have been less accurate lately because we've been on pins and needles, kind of waiting on see what's going on with the debt ceiling, talks, conversations, negotiations, arguments, whatever you want to call it. So we had this back and forth. The minutes were released, right? FOMC minutes, I believe, is that right? Released right there? No, right here. And came down, came back up, down, up, flush. It's just really hard to trade this stuff. And then again, I'm not sure what's going on after hours here. But let's put this in a little more perspective here. And if you've been trading this, this is a 20-day chart. I talk about this every week. It's just we're straight down here, we're straight up here, came right to our tree line there, failed, came back up, went right through it there, thought we might fail there, we did not, went right up to the next tree line, failed directly off that, thought this might hold and we bounced, did not, went right through it, so again, right to the level, etc., right down here to the level. So again, back and forth. But if you're trading this stuff, you know how hard it is to be right for more than an hour or two during the day, because you get these wild swings back and forth. Get long, get short, get long, get short, straight up, straight down. This is a pretty wide range here. So that's 4062 up to 4227. It's a pretty top to bottom here. That's a pretty good range. Let me switch this. I'm going to put this to my regular voodoo lines here, and I'm going to go out to a little bit further, larger time frame, and I want to show you kind of what this all looks like. Basically, I talked about this last week. Now this is a trailing 1 year chart, and again, I'm going to stick with the ES because this ES represents the SPX, represents the SPY. That's the most broad representation of the market, in my opinion. And we've been kind of, just chopping in this range, kind of like we did here. And sooner or later, we will break out one way or the other. But we are at a pretty critical point because we've got, what's going to happen with the debt ceiling and that's going to dramatically affect the bond market and so forth. So we know that there is a lot of fear being built into the market, and we can see it in the VIX. The fear index. People don't call it the fear index as much as they used to, but I'll show you here. So this is the VIX, and as you can see here, we have been steadily climbing off this 15, 16 level straight up. Which might not look like much, but that's a pretty good move in a very short period of time. Again, we are kind of chopping in this range. So the debt ceiling countdown has begun, of course, and the deadline is June the 1st. Are they going to reach an agreement before then or not? Or we're going to default? And I'm always been a math guy, so I like to put everything in terms of percentages, and I would say very small chance of a full out default on it. It is possible, but I'm thinking 90-10 or so. It's going to be very, very unlikely that will happen. It's never happened. I guess I should say never happened, but we've been this close. I think people think maybe 2 or 3 times 4 or 5, 6 times 4. It's been like 80 or 60, I think 68 times or 78 times. I can't remember. It's been since like the 60s. This has been going on. Many, many, many times been here before, but the numbers are getting bigger. The ripple effect is getting larger, so this could be a big deal. So got to be careful out there. I'm currently almost flat. I've got a hedge on the downside, but I do think what more likely happens is that we get a deal done, market goes higher, we go back at least to test this 4200 level here. Again, this is a 1-year chart. We go back to test this 4200 level. Maybe we get up here, maybe. But ultimately, I think we start heading back down. And at this point, I don't think we go this way if we get a deal done. But either way, whether we go up, or not, I think we are ultimately going to come back down. And if we don't get a deal done, yes, we're going to come down in a big way too, unfortunately. Janet Yellen was talking today saying that if you look back at 2011, and we kind of mirror this to the same scenario, she said the market dropped 20%. So 20% here would be about 800 points down, something like that from here. So you're talking about 30, what are we talking about? 3,200, 3,300, something like that. I mean, depends on where ES or S&P, SPX, and go full 20% or not. But, it won't be good. So be careful if you've got a bunch of long stocks or things like that. You might want to consider some hedging. Again, I don't think a default's going to happen. And if or when a deal gets done, I do think we go higher. I said that last week. I said I think we probably get a deal done, probably goes higher. But man, the market has shown us this week, in the last couple of days, that it is not going to tolerate. It's not going to tolerate. Look at that, boom, 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 boom. It's not going to tolerate a lot of, problems with the debt ceiling. So be careful if you've got. I would say this: if you got profit. I would take profit just ahead of this. We, in the bias account that I trade, we took, I don't know, 3 or 4, 5 winners last week, and we took 1 winner off yesterday, and I'm basically flat except for a hedge on the downside. And I'm looking, I'm even considering doing something on the upside for the scenario that we get a deal done and we get a big pop up here. But I can't find anything that really makes sense yet, but I am looking. So again, today's the 24th. Over the next week, be cautious on putting any trades, if you're trading options or futures or something, I would try to be out as much as you can by next Wednesday ahead of the debt ceiling limit, and just be really careful around the next week or so. After that, let me move this forward. So on the 13th, we've got the next CPI. Then the 14th, we've got PPI and Fed meeting. And the Fed has been saying, you've got half of the Fed members saying we are see a reason to continue hiking rates, and the other half says we don't see any reason to hike rates, and so we're kind of in the middle, and it's not directly half and half, but you've got people speaking out both sides, whether we're going to get more hikes or not. The market is expecting rate cuts, and I'm not seeing that. I've been saying that. I don't know where these guys are getting this from, but the market was pricing in 3 rate cuts this year, and I'm like scratching my head going, I don't know who came up with that, but that doesn't make any sense to me. But we shall see. So anyway, the bottom line, be careful here. This is a very erratic market. It's good for trading, but short time in, short time out, get the money and get out. That's what we've been doing. And just be real careful, because it's going to get really dicey in the next week or so. So be careful. All right, guys. Well, if you need help, if your trading's not going great, or you want to join in with us at Simpler, come into our trading rooms. There are people there to help. I'm there to help. We got lots of good traders in there, and we can help you. So come check it out. Come join us. We put trades on all the time. So hopefully we can help. So thanks for your time, guys. I appreciate it, and be real interesting to see what happens next week after the debt ceiling deadline. So keep your seatbelt on next week. Thanks for your time, guys. I appreciate it. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me